China, in terms of the equities market as an asset class, remains very attractive, both relatively speaking and in absolute terms. And yes, we have seen a correction year to date, but don't forget, we were coming from a very high base. So the Chinese market was one of the best performing asset classes last year. And the reason why it performed so well was because we did see a very strong, relatively speaking, economic recovery. We've seen the flattening of the COVID curve. And in terms of policy response, the PBOC was a lot less aggressive or more disciplined versus other central banks in terms of how they stimulated the economy. So if we don't see a pickup in global demand and a global economic recovery, the Chinese regulators still have the adequate tools in terms of adding stimulus back into the Chinese economy. So as such, because we are seeing such strong growth rates, it's no surprise that the policymakers are looking more at a tightening scenario or a tightening bias, which has investors a little bit nervous. But having said that, the companies are still delivering some very good earnings.
Right. Is the interest in the property sector in China waning?
Well, the property market remains the backbone of the Chinese economy still, despite many domestic Chinese investors now adding to capital markets, especially the equities market. So what we've seen over the past several years, in fact, not just since COVID, is the policy response around property being very range bound. So enough stimulus that people do buy property, but not ensuring that we don't see a bubble or too much price appreciation so that people can't actually buy properties when they urbanize, because urbanization, growth of the middle class, clearly an important driver of growth going forward.
What about technology? What's the approach towards technology right now? And this is pretty much a question that I pose to most China specialists on understanding whether they have scaled back or increased exposure to the tech space or broaden out from the bigwigs.
So as we were just talking about in terms of the valuations, going into 2021, it was becoming harder and harder to actually justify the valuation gap we saw, especially with the big tech names, and especially given some of the regulatory changes we did see going into the end of 2020. So in terms of diversifying one's portfolio, there have been a lot of attractive smaller to mid-sized tech companies that are doing very well, increasing their market share. Don't forget, when we look at the Chinese government's policy, there's still a big emphasis in terms of R&D spend, in terms of data, in terms of innovation. So the story around innovation, not just relating to the tech sector, not just relating to biotech, but across many sectors, is really underpinning the economy and is very much part of whether it's a dual circulation policy or indeed the next 5-year plan. So technology remains a really strong theme within China.